Hi, so in the last few videos, we covered the first five chapters, which involved going through the accounting equation, learning the process of double entry for assets, liabilities, and capital accounts, as well as revenue and expenses account, accounting for stock, and then in the last chapter, chapter 5, we found out how to balance off accounts and carry down the different balances. Basically in accounting, so all the double entry procedures that we do in order to then uh, show the owner the final position of the accounts, we need to balance all these accounts and make them in a list for us to be able to then prepare the financial statements. So in this chapter, the trial balance, we'll be learning how those balances all come together in the form of a trial balance, which then enables accountants to create balance sheet and profit and loss account. So objectives of this chapter is number one, to prepare a trial balance. Number two, explain why the debit and credit of the trial balance totals should always be equal. Number three, some of the possible errors that can be made when double entries are being entered, which will not prevent the trial balance from balancing. And then lastly, we will see how uh, describe use for trial balance other than to check for double entry errors. So we'll continue with the to- we'll continue further with the process with our understanding of the debit and credit and how it leads us in preparing the trial balance. So as we learn in the double entry bookkeeping chapters, each transaction leads to would lead to result in two aspects of the same transaction, a debit and a credit. One would be a debit and a credit. So in effect, when no matter how many transactions we would have for a month, the debits and the credits would always be increased or decreased by the same amount. So in effect, and to sum it up, no matter how many transactions we have, whenever we would kind of like draw up final balances, always the total of all the debits and total of all the credits should be equal. This is called trial balance. So trial balance is the process of writing down all of the accounts that the business has, and then classifying the balances into debits and credits, and in the end totaling all the balances to make sure both the debits and the credits are equal. From the trial balance we then go on to make financial statements. So if we were, you can go through the activity 6.1 just to revise your double entry basics, but because we had gone in a lot of detail earlier, I will not dwell on it much. So if we were, so this example shows how if we were to just kind of like do very simple basic entry of examples that we did in chapter 5, for each of them they could be like, we could put in all the balances together for debit and credit, all transactions, but then this is not how a trial balance would look like. A trial balance is generally made of a single balance. So like for M Spencer, we have both a debit balance and a credit balance. We can understand that the debit balance is because we sold goods to him and then 16 was a return, but then this does not this is not like the appropriate method of making a trial balance, because then for each person we could have multiple three, four, even five balances, and it would not be very efficient, and it could get very confusing. Like for D Hughes, there is a debit 60 and then a credit 60. In effect, it is a nil balance, but which also now here this would make the trial balance because we both have the debit and the credit. But then in terms of when we are plotting using the trial balance to make a financial statements, it would just give us a confusing theme, because we would be like whether D Hughes owns it or does not own it. So what is the most appropriate method uh, of drawing up a trial balance? The form of trial balance used by accountants is a list of account balances arranged according to whether they are debit balances or credit balances. So in this account, we are just going through, we're just kind of like plotting down the same accounts that we had in chapter 5, which we did in the balancing of accounts. So if we would have multiple accounts and multiple entries throughout the period. So here for purchases, we will have many purchases, and then towards the end of the period, we would total the balance on the debit side to balance off the account. Uh, if you have forgotten how to balance off the accounts, I'll advise you to go and check chapter 5 again to balance the accounts. So the way of balancing will be debit all the totals and whichever side shortfalls add that amount there. So we will close off all accounts, expenses, income, asset, liability, and capital. All of these accounts would be closed, so the closing balance would then be brought down. So whatever this balance, so the closing balance, if we will be preparing trial balance as at 31st of May, we will take all the balances as at that date and then start plotting it down. So now this is the balance that you would take for purchases. This is the balance we take for sales, balance for return outwards, the balance for return inwards, f- sorry, there is no balance for S small, so A lions. Now we have to make sure, we have to kind of like when we are doing this, wherever there is a balance, we have to make sure that we understand which is a debit balance and which is a credit balance, and then add it in the trial balance accordingly. So, cash, for example, is a debit balance, even though it's on the credit side, because for next year it comes down to on the debit side, it is a debit balance. So, we would take this is a debit balance, this is a debit balance, this is a credit balance because we owe money to aliens because it was brought down for the next period. So, once we do all of these, then we start plotting. So the first account we had is of our purchases and the balance is 994. Now purchases is always a debit balance by why? Because it has the effect of increasing the stock. So purchases is always a debit balance. Uh, Sales is a credit balance because sales it means we are selling stock and it has the effect of bringing down the asset of stock, so it would be credited. So sales always has a credit balance. So we'll put this plot this here for 90, and then for each individual account we'll go accordingly and we would plot all of these here. In towards the end, we will total up these balances, and then the balance of the debit should be equal to the credit as per the double entry bookkeeping process. So once the balance sheet balances, this means all the transactions that we have recorded, we we put in both the both side of the effects in the we put in both side of the effects when we were accounting for them. So there was a debit and a credit. However, if the trial balance is not balanced, which means there we made some errors, and we will discuss later how what to do when we have when we it does not balance. So just revising on the trial balance, the way it is made, you have to write the heading on top, and in vertical form you'll write down the account names, and then you would have two columns, one for debit and one for credit, with the currency sign on the bottom of that, and then you start plotting or you start putting down amounts that you would take from the account close off balances, and towards the end you would total them down and kind of like have double lines to do this. So the trial balance is generally as at a date, like is it as at for the balance sheet, it does not cover a period, so it would show balances as at a specific date. In this case, it is 31st May 2009. We can make balance sheet as at any single day, but generally it's either close of month and close of year. We will now move on. As I mentioned before, if the trial balances, that's very good. Good news because it generally shows that we have taken both aspects of the transaction. However, even if the trial, so if it does not balance, what are the mistakes? Generally, If the trial balance does not balance, it means either we have issues with the addition, there could be addition errors, which means when we were balancing of the accounts, maybe we did not balance the accounts correctly, or one figure for the debit entry and another figure for the credit entry. This means maybe it was an item we purchased for 116. We debited one account by 116, but the other account we debited only by or credited by 106. So this